Good day, Matrix. We are going to be going through task 13.3 and 13.4. For week 11, you are required to complete 13.5. And please remember that we will be writing on Tuesday, the 23rd of June, our SPA test for the term out of 100, which consists of 2 questions, your asset management out of 50 marks and cash flow statements out of 50 marks. So let's get started. Kwa Mabula Manufacturers produces cricket bats that they then sell to various sport retailers at a markup of 50%. Remember, markup is always important to note in order to work out either your selling price or your cost price. Required, you need to use the information given below to prepare the following for the financial year end the 28th of February 20.8. We need to complete the production cost statement, the income statement, and the relevant notes in order to show the workings. Information. The opening balances appear in the books on the 1st of March 20.7. Please note that when we are doing cost accounting, we basically want to figure out how much does the business basically spend on producing the goods that they are going to be selling. All right, it's the cost of the production. Simple and easy to understand. So remember, in order to complete your production cost statement, you have to first complete the relevant notes to show the workings. So let's start off with note number 1, which would be your direct raw materials. All right, so basically we're going to be going through these adjustments, and I'm looking for every single thing that has raw materials because that will affect note number 1, the direct material note. So firstly, we had an opening stock, which is 180,000. And then we have number 1, raw materials amounting to 600 was bought on credit. Raw materials amounting to 460 were bought for cash. Carriage on raw materials amounted to 150 incurred on credit. Remember, when you are paying for delivery services to deliver your trading stock, which you're going to use in order to produce your product, that will be charged to direct materials. All right, carriage on purchases, they are bringing your raw materials to the business, and that is going to affect note number 1, direct materials. You are paying for your materials to be delivered to the business. All right, and number 4, we also have raw materials in brackets factory amounting to 24,000 that was returned to creditors. What else? Let's see if we can see another adjustment with regards to raw materials. And then you will see as you go through the adjustments that we have a closing balance. So now that we've basically identified all the raw material adjustments, we can then go to note number 1 to complete the direct note. All right, so I'm taking you directly to the answers. So our opening stock, remember direct material cost, our opening stock was 180,000. Then we'll have net purchases. Now net purchases is the raw materials that we have purchased during the year. So I'm taking you right back to note number 1 where they said raw materials amounting to 600 were bought on credit. So there's my first 600. And then I also bought raw materials cash 460. So I'm adding that 460. But then you need to note that at note number 4 we have returned goods back to our creditors. So moving right back to note 1, the 600 for credit, 460 on cash, subtracting what we have returned, will give us net purchases of 1,036,000 rand. And remember, the carriage on purchases, you are paying for your raw materials to be delivered. Therefore, you will record it as a direct material cost. Details would be carriage on purchases, and that amounted to 150,000 rand. Once we have those three figures matrix, I'm then going to add it up in order to get a total amount. Opening stock, net purchases plus carriage on purchases will give me a figure worth 1,366,000 rand. All right, moving back to the last little raw material note that we had. So remember, we have our 180,000, we have the 600, we have the 460, we've taken carriage on purchases into account, and we also subtracted from net purchases the 24,000. Now raw material stock account that is left over at the end of the year, basically it was not used, so you cannot take it into account. So we are going to subtract that balance. Closing stock represented in brackets. Please, Patrix, remember to always show amounts that should be subtracted in brackets. Once we have that, I will then take the 1,366,000 and I'm going to be subtracting my closing stock balance of 64,000 to get direct material costs. So this amount over here, ladies and gentlemen, is your direct materials that you have issued during the year. All right, please remember that. Moving on to direct labor. Again, direct labor is factory business people, like let's say factory workers who are directly working with the product. For example, these are people who make cricket bats. So the people actually working on making this cricket bat will be the direct laborers. Anyone who doesn't touch the product is seen as indirect labor. Okay, so let us go and have a look for our direct laborers. Salaries and wages. Number 6. Salaries and wages paid amounted to 360,000. So that amount is basically every single department in this business, and it has to be broken up in accordance to direct labor, your indirect labor, admin costs, etc. And they go on to say that 180,000 of this total figure was for direct labor. Alright, so it's simplified, straight to the point. All you gotta do is go to your note number 2, direct labor. You're gonna state that is for factory wages, 180,000. There is no need to add anything extra, especially when there are no medical aid contributions involved. So then I'm going to total it up, and for direct labor cost for this business, it will be 180,000. All right, so moving along, we are now going to work out our factory overheads. What is factory overheads, you ask? When we answered task 13.1, we identified factory overheads as the factory expenses that are incurred by the factory. All right, it's expenses incurred by the factory. No other department in the business, solely the factory. All right, so let's go and look around for that. consumable stores, and in brackets it says factory, bought for cash amounted to 44,000 Rand. So as soon as they say factory, we know that consumable stores is an expense. Unless it is not used, then it becomes consumable stores on hand. All right, but we know it's an expense. Now you just need to go and have a look. Did you have consumable stores on hand in the beginning of the year? And yes, we did. We had 14,000 Rand worth of consumable stores on hand. We also purchased consumable stores during the year worth 44,000 Rand. And please note that you had 6,000 consumable stores on hand, meaning 6,000 Rand of your consumable stores was not used, and therefore it needs to be taken out of the calculation because that becomes an asset. And remember, factory overheads are factory expenses. So there is my consumable stores. I have the 14,000, which was my opening balance. I'm adding what I've purchased during the year, the 44,000, and I'm subtracting what I did not use of my consumable stores. This is a popular adjustment in cost accounting when it comes to consumable stores. So please look out for opening balances, what you have purchased during the year, and you're going to be subtracting what you have not used with the closing balance, your consumable stores on hand, and that will give us a value of 52,000 Rand. Okay, remember, moving along, we are looking for the next factory expense. Let's just scratch out what we have taken into account. We're not done with number 6 as yet. Salaries and wages amounted to 360. We know that the 180,000 was for direct labor. It has already been taken into account, so I'm scratching that out. 80,000 was for admin expenses. Do we want that? No, we don't. We want the factory indirect labors. And the balance was for indirect labor costs. Indirect labor cost is factory overheads. So your indirect labor is the people that are working in the factory but not working with the actual product. They're working in and around the factory, making sure that the factory is clean. Example, your cleaners. You cannot work if your factory is not cleaned properly. All right. Health and safety in a business is always important. So let's go and work out our indirect labor costs. So they said that the total of our indirect labor was 360. We're subtracting that 180,000, which was for our direct labor. And then they said that 80,000 Rand was for admin costs, which would leave the difference of 100,000 that would be for your indirect labor. And you would see they put salaries and wages and also in brackets indirect labor. If you are just comfortable using indirect labor, that is okay. It is acceptable. Right. Okay, then we're moving on to the next factory cost. We're still coming back to number 6 because we never took the admin expense into account as yet. So I'm not scratching it out. Moving along, depreciation on factory equipment must be written off at 12% on the diminishing balance method. All right, so remember matrix, we've got 2 methods for depreciation. We know that we have the cost price method, which is your cost price times the rate which they give you, which gives us our depreciation. And then we have the diminishing balance method, which is the longer method. You first have to work out the carrying value. And how do you get your carrying value matrix? You will take your cost price of the asset, subtract the accumulated depreciation, which will give you your carrying value. From this point, you can then take that carrying value and multiply it by the rate which they have given us, and you will get your depreciation for the year. All right. So this adjustment has told us that factory equipment must be written off at 12% on the diminishing balance method. So which one are we going with? We are going with the diminishing balance method. Now I need to go and have a look at my opening balances to see what is the balance of my factory equipment. It's 100,000, not 100,000, 1 million rand. 1 million, and the accumulated depreciation on the factory equipment was 240. So I'm going to take 1 million, which is my cost price, and I'm subtracting the accumulated of 240,000. And then I'm going to multiply it by the 12%, which they have given us there. So let's go to our calculator. It's 1 million rand. Subtract accumulated depreciation of 240,000, which gives us a carrying value of 760. I'm taking that carrying value and I'm going to multiply it by the 12% rate which they have given us. The depreciation on our factory equipment will equal 91,200. So let's go and see if we are correct. Depreciation, there's the cost price, subtract the accumulated depreciation, multiply by the rate, and indeed we are correct, 91,200 rand. Moving along, I'm scratching that out. Depreciation amounts to 2,500 on office equipment and 11,000 on sales vehicles. Now, ladies and gentlemen, remember you are working out your factory overheads. We are not looking at office or sales department as yet. Alright, so we're moving on to number 9. Rent amounting to 500,000 was paid during the year. So our rent for the full year amounts to 500,000. Of this 500,000, the different departments will pay a certain percentage of the rate. And then they clarify that percentages for us. They say the factory uses 60% of the floor space. So we are then going to take the full amount of the rent, which was 500,000, and you're going to multiply it by 60% to figure out what is the rent which the factory pays. How much? 500 times 60%. The factory space pays 300,000 rand towards rent. Very important, your calculation there's the 500,000 times the 60% floor space, 300,000. Nice, easy, simple. Okay. Other expenses were electricity, 344,000. Of that total, the factory used 320, so that was given to us. Sales vehicle running cost, it's got to do with the selling department. Sundry expenses, 90,000. Alright, so let's go and show you the electricity that was given to us, the 320. We've got it over there. So there's a little bit of a calculation that you will have to work out when we are completing an adjustment where a ratio is given. You got to work out your denominator using your ratio. So the total sundry is 90,000, and these are split in the ratio of 4:1 between the factory, office, and sales department respectively. Respectively means as it is in order. So 4 meaning the factory uses 4, office uses 1, and the sales department uses 1 as well. It's going to be shared that way. So how are we going to do this? I'm taking the ratio of 4:1:1, and I'm going to add it up to get my denominator. 4 plus 1 plus 1 equals 6. What is the total amount of the sundry expenses? It is 90,000. 90,000 multiply 4 over the denominator, which we worked out using the ratio, and that should give us our answer. 60,000 Rand goes to our sundry expenses, which we have over there. Once we are done with that matrix, we will then add this figure up to get factory overhead total of 923,000. Let us complete number 4, the selling and distribution costs. Where are we? Depreciation amounts to office equipment, and 11,000 to sale vehicles. So there the depreciation has been given to us, the 11,000 Rand. The rent, remember we took the total amount of 500,000 and we multiplying it by the 25% floor space. Electricity, the total amount was 344,000. You are subtracting the 320 that was used for our factory overheads, and we're also subtracting the electricity that was used for the selling and distribution department, which is over here, in order to get what is the electricity that is used for the selling department, which is 14,000. All right, then we had sales vehicle running expenses. Where is that? Sales vehicle running cost is 72,000. Okay, so we're putting that down there, our 72,000. Okay, that was given to us. And here's our sundry expenses again. Remember the ratio. It's now turning around 90,000 times 1/6. And that should give us 15,000. And we'll do the very same for the admin costs. 90,000 times 1/6. The 15,000 was given. All right. And then we have commission. What is commission? Commission is what a salesperson receives after making a sale. All right. So let's go and see our total sales for the year amounted to 3,600,000, and the commission paid to the salesperson is 5%. So I'm taking 5% of 3,600,000, and I should get the value of 180,000, and that is basically the salary of the salesman or sales lady. I will then add all these costs up to get the total amount of selling and distribution costs at the end. And remember, the salaries for the admin cost was 80,000 Rand. Okay, we've basically completed number 4 and number 5. Now we're going to be moving on to note number 6, the cost of finished goods sold / finished goods. They did give us an opening stock worth 70,000. Where did I get that from? There's my finished goods stock account, 70,000. And they also gave us the closing stock of 80,000. So I've got the opening stock, I've placed it at 70,000, and I've got my closing stock of finished goods. That is represented in brackets because that it has not been finished as yet. All right. You want to know what is the cost of the finished goods that you have sold. So you need to work out your cost of sales and how you're going to be doing that. Remember, they gave you the markup of 50% in the beginning of the activity. And they also told you that the sales amounted to 3,600,000 for the year. Which is over there. So let's work that out. How do you get your cost price? Again, cost price equals to your selling price times 100 over 100 plus your markup percentage. We know that the selling price amounted to 3,600,000 multiplied by 100 over 150, and we should get a total of 2,400,000. That is our cost of sales. And now we can basically work back in order to get the cost of finished goods produced during the year. So remember, when you're working back, things that should have been added will now be subtracted, and amounts that would have been subtracted will now be added. So 2,400,000 adding 80,000 subtracting 70,000 should give you 2,410,000. Where are you going to be taking this amount? You are taking it to your production cost statement over here. That is your total. All right. And you will see that there was a question mark at our work in progress stock account, and we're working back in order to get that amount. Okay, so now that all the notes are complete, we can basically complete the production cost statement as well as the income statement given to us. Direct material costs, we've taken it from note number 1. The total is 1,302,000. I've placed it over there. Direct labor costs, we've taken it from note number 2 over there. The total is 180,000 and I've placed it over there. The sum of note 1 and note 2, I'm going to add it. It's going to give me the figure known as prime costs, direct costs or prime costs. It is the sum of direct material costs and direct labor costs. All right, then our factory overheads, we took it from note 3. We worked out factory overheads to be 923,200 Rand, and I placed it over there. What am I going to do now, matrix? I'm taking my prime costs and I'm going to add my factory overhead costs to give me my total manufacturing costs. And then I'm going to add my work in progress at the beginning of the year, which was an opening balance work in progress, the 80,000. I'm adding that to the total manufacturing costs in order to get this figure over there, 2,485,200. At this moment, this should be blank. We do not know this figure as yet, so we need to work back. If I take 2,485,200 and I subtract 2,410,000, I should get a figure of negative 75,200. Work in progress at the end of the year, it's work that is not yet complete. Remember, cost of production, you want to know what is the cost of the finished goods that we have completed. Anything that is not completed is taken out. All right. I hope that is clear, matrix. Moving along to our income statement. Our sales amounted to 3,600,000. We've got that in the adjustments. And we worked out our cost of finished goods sold, or our cost of sales, to be 2,400,000, and we took that from note number 6, which is over here. Cost of sales 2,400,000, and remember we worked that out using our sales and our markup. And remember, sales minus cost of sales will give us our gross profit of 1,200,000. How did I get the other costs? I took it from note number 4 and note number 5. Note number 4 for admin costs amounted to 417. That's from your selling and distribution. And from the admin costs, it amounted to 182,500. We basically put those figures over there, and I've added it up to get other costs worth 599,500. I'm taking my gross profit, I'm subtracting other costs in order to get my net profit. I trust that this is clear. If you have any misconceptions, please feel free to contact me via the WhatsApp platform. Thank you.